European markets close higher, extend their New Year rally as the World Economic Forum kicks off in Davos. Stocks in the Asia-Pacific open largely lower while the SGX Nifty signals a mildly higher start for the Indian market. No cues from Wall Street as the US markets remain shut on Monday on account of a holiday. The World Economic Forum kicks off in Davos with fears of a global recession looming large. IMF says international relationships are worsening after decades, warns that economic fragmentation could cut the global economic output by up to 7%. India is seen as a bright spot by investors at Davos amidst a gloomy global growth outlook. Top Indian CEOs are upbeat about restarting the capex cycle, expect the government to continue with infrastructure spending ahead of the upcoming budget. The government cuts windfall gains tax on crude in its latest review, slashes the levy by 200 rupees to 1900 rupees a ton. The excise duty on export duty on diesel is cut to 5 rupees a litre, while that on ATF has been reduced to 3.5 rupees a litre. The RBI issues a discussion paper seeking to move banks to an expected loss approach with respect to bad loans. This will have no immediate impact on banks, but a huge rise in provision is seen when it comes into effect. Good morning in Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking. Of course, US markets were shut on Monday on account of a holiday, so no major global cues, so to say. But the European markets, they closed higher. And if we take a look at what the Asian markets are doing in early trade, in the absence of any cues coming in from the US markets, well, largely lower, so to say, but absolutely flat with some negative bias is what we can say about these markets. Nikkei, though, is higher by around 1%. We also have Straits Times, which is higher. So it's largely a mixed picture as far as the Asian markets are concerned. While we do have Hang Seng in Taiwan in the red right now, there are a couple of them which are trading in the green, like Nikkei, which is sitting with gains of around 1%. The SGX Nifty, as a result of which, is indicating that the start for our own markets could be it'll be flat to a mild green. A 9-point uptick is what this one is indicating. Remember, yesterday's trading session was very volatile, so we'll have to see which way things go for our own markets today. For now, SGX Nifty is in the green, up around 9 odd points. As we lead up to the Bank of Japan's policy decision on Wednesday, let's listen into what Stephen Davies of Javelin Wealth Management expects from the central bank.
We're going to continue to see that pivot, that gradual support of the yen, and most particularly the BOJ to some extent reversing their weak yen policy, which was such a surprising feature of 2022. So I still think that there's upside in the yen. It's probably now no longer going to be quite so unilateral. It's more about broader dollar weakness as interest rate differentials begin to narrow on a global basis. What we've seen from the Japanese government and the BOJ is typically a more gradualist approach. I think we're going to be returning more to that than the sort of sharp shocks that was a bit of a feature of the last couple of months.
Okay, that is about the Asian markets and what is expected from the Bank of Japan meet. But let's talk about the European markets. They closed higher on Monday as investors assess the outlook for growth and inflation in light of recent data alongside the beginning of corporate earnings season. The FTSE saw its fourth straight session of gains and is now less than 100 points off its all-time high of 7,903, which it hit in 2018. The pan-European Stoxx 600 too closed about 0.5% higher. Okay, that's all about what's happening in the global markets, but of course these will have an impact on our own markets as well. So let's get in our research team to tell you just that, the market setup, the stocks that are likely to be in the news and the action from the F&O space as well. Before we talk about the market setup today, no, actually we will talk about the market setup. Vivek is joining us to tell us all of it. Vivek, over to you.
Well, good morning. A very volatile trading session is what we saw yesterday. Markets cooled off quite significantly. Most of the rally that we saw on Friday, the recovery on Friday, mostly got sold into in yesterday's trading session. So going into today's trading session, not too many cues given the fact that you did see some major markets closed. As you mentioned, European markets extended their rally. However, the gains weren't very sharp. Now, coming to crude oil prices, a key thing to keep an eye out for, Brent futures actually cooled off a little bit from the recent highs that they were trading at, so down almost 0.4%, trading closer to the $84.92 a barrel mark. WTI futures down 0.3% at $79.6 a barrel. Now, when you're talking about the Asian markets, very mixed cues that we're getting in from there as well. Slightly on the lower foot, SGX Nifty 2 is indicating a muted start as far as our own markets are concerned. But what are the key cues? Q3 earnings season, that'll be the key thing to keep an eye out for. You did see results yesterday. The Federal Bank numbers were very good. Today, key numbers include ICICI Prudential, ICICI Lombard, Bank of India, Delta Corp. These are the key four numbers that are in the F&O space. So markets will keep an eye out for them. And when you're talking about yesterday's trading session, almost 1% downtick for both Nifty as well as Bank Nifty from highs. So it'll be interesting to see whether that particular trend continues in today's trading session as well.
Okay, all right. That's the market setup. Thank you so much for that, Vivek. Over to Ekta now, who will start all the stocks that will be in focus in today's trading session. Hey, Ekta, good morning.
Morning. Well, I'll start with the windfall tax. There has been a revision which has taken place overnight. So we will see stocks such as ONGC, Reliance in focus on account of that. Separately, sources say that Shojit's corporation is likely to sell up to 1.6% stake in Samvardhan Motherson via a block deal. Siemens, it's an interesting order win there. They've signed a contract with the Rail Ministry for around a 26,000 crore locomotive project. Phoenix Mills subsidiary has completed the acquisition of Janus Logistics for 26 crores. India Pesticides has commissioned a herbicide technical at their Sandila plant, which is for basically export markets. Bank of Baroda, the government has extended the term of the MD and CEO until the 30th of June 2023. M&M has launched its first C-segment electric SUV. V-Mart, there was a fire accident that occurred at the company's store at Kanpur. Result reviews include Angel One, Kesuram Industries, Tinplate, and results today, ICICI Pru, Bank of India and Mastec are a couple to look forward to.
Okay, all right. So those will be stocks in focus today. Ekta, thank you for that. Over to Nigel now. A lot happening in the F&O space as well. Nigel, tell us.
Well, that's right, Sonal. In yesterday's trading session, we had a bit of a down session on the Nifty itself, and the F&O data was more bearish actually, because they added shorts, they bought puts, as well as they wrote calls. So on the short side, they added close on 10,000 short contracts. They unwound some longs as well, which takes the short positioning to around 60%. On the index option side, well, they bought puts. They bought close to around 2 puts for every 1 call. So they bought 75,000 puts. That's telling you in case things go wrong, there is some cushion on the downside. But they're writing calls very, very aggressively. And that again tells you that 18,050, 18,150, that level, the bears believe that they have it and they're going to defend that mark, going by the kind of call writing that we've seen. Yesterday, which were the calls that were active? The 18,000 call, 18,100 call, both of them were fairly active in yesterday's trading session. Between them, they added more than 90 lakh shares. But the 17,900 put, it saw some unwinding, telling you some bit of skittishness on the bullish side, because that did unwind, yet that has the highest open interest on the put side. So the guess is that, in fact, maybe we'll continue to see a fight at around that 17,750 to around 17,800. Now, the PCI, remember when it goes to around 1.04, 1.05, in that vicinity, 1 plus, then we see a bit of a pullback. Now it's heading back towards the lower end of the range. At around 0.7 odd, we've normally seen a bit of a relief rally that plays out. So what are the levels you're looking at? Well, for the Nifty and the Nifty Bank, yesterday they almost went to the 20 DMA. In fact, they visited that. And from there, we did see some bit of selling. So that becomes an important resistance zone. On the downside, we have seen on the Nifty as well as the Nifty Bank, 41,750 and 17,750. That's the buy zone. So that's in the slot actually for the bulls. And odds are that that level will get, will get defended. The SGX Nifty is suggesting a bit of a flattish start. Maybe if you get a bit of an intraday dip and closer to around the 17,800 odd, maybe in fact, risk reward could favor you. But for the time being, the Nifty in a bit of a broad band. Back to you.
Okay, all right. So that's the market setup. Nigel, thank you so much for those F&O cues today. For now, we'll slip into a short break. We'll get to the highlights from the World Economic Forum's Davos Summit after this short break. Stay tuned. Welcome back. You're still watching Power Breakfast here on CNBC-TV18 as world business and policy leaders gather in Davos amid multiple headwinds for the global economy. Top Indian CEOs are exuding confidence about the India story. Tata Steel's TV Narendran is bullish on India's prospects as an exporter of steel, while Sanjeev Bajaj says the general feeling is that the worst is over for the economy. Let's listen into their comments.
China opening has certainly helped commodity prices. So not just steel, if you look at copper prices, it's gone up about $400-500 in the last month. Steel prices have gone up in China. Domestic prices have gone up by about $100. So overall, we see a positive sentiment. Iron ore prices have gone up. Coal prices have gone up. Not all of it is good for the steel industry. But overall, the sentiment is changing in China, certainly. And that has a huge impact in the world, as you know. China is looking good. India is looking great. So I think in many ways, many parts of the world are picking up where it left off over the last few months. So we are quite positive over the next 6 months. And there's no reason why India shouldn't be a big exporter of steel. You know, India has the raw materials, and why should Japan, China, and Korea be exporting steel when they don't have the iron ore and we have the raw material, and we should be exporting steel, creating jobs. The second part is, yes, when I look at our customer segments, if you look at automotive, they are back to where they were 4 years back. If you look at construction, it's quite strong. Industrial buildings, a lot of investments going on in supply chains, warehousing, a lot of investments in oil and gas. So all that will trigger private sector investment. So I think we are probably 6 months to 1 year away from getting private sector investment back.
The general feeling is that the worst is over. There's always a caveat, right? Because we do live in very uncertain times. But currently it looks like the worst is over. The first should be a continued expansion in the government infrastructure funding. We have seen that this has played a very positive role the last few years. It's held our economy together. It's provided rural and urban jobs and created that much more domestic consumption.
All right, we'll keep getting you excerpts of those conversations through the course of the day. But with that, we'll move on now. The RBI has issued a discussion paper that seeks to move banks towards an expected loss approach with respect to bad loans. What does this mean for listed banks? Lata is joining us to explain all of that. Lata?
Well, currently, banks provide loans after you incur a loss. After the money doesn't come back for 90 days, that becomes a bad loan. Now, what the Reserve Bank is proposing is that when there is a feeling of default itself, you start providing. That is expected loss. This is already in vogue in the US and in Europe, and of course, even in India. For NBFCs, there is an expected credit loss provisioning. Now, what does the discussion paper, which was issued by the Reserve Bank on Monday, state? It says banks have to classify all their loans into 3 stages. Stage 1, Stage 2, Stage 3. Stage 1 are all standard loans. Stage 2 and Stage 3 are where you are expecting credit loss. You know, even now, when a loan is delayed by over 30 days in repayment, it's called SMA2. If it is SMA1, if it is delayed by more than 60 days, it's called SMA3. Those will probably come under these expected loss, Stage 2 and Stage 3. How much you have to provide will depend. The banks have to decide themselves. They have to create a model. And this, you know, there will be company-specific factors, like one instrument of that company which is floating in the market has been downgraded from, you know, AAA to AA or from AA to A. You know, that could be the factor. The other could be commodity prices could crash. That could be an expected loss. Or there could be macro deterioration. The banks decide for themselves, but they have to independently validate their rules. And the Reserve Bank will also provide guidelines and a floor so that there is some uniformity between banks in terms of how they calculate and provide expected loss. Now, what is the impact on banks today which are listed? It incidentally doesn't apply to cooperative and regional rural banks, only to scheduled commercial banks, most of which are listed. Now, there is no immediate impact because now they've invited comments, the discussion paper, then a draft will be issued. And then for the final rules, they will get 1 year to prepare for it. So it's not an immediate impact, but it is likely that there will be higher provisions because the loss has to be calculated on probability of default. So last 10-year experience could be taken into account, and therefore there could be higher provisions. The Reserve Bank itself in the discussion paper says that there could be a capital shock. Means you're going to report less profit, so less goes into the capital. So there will be a capital shock, and therefore we will give 5 years for the banks to recoup their capital. All this language gives the indication that this is a sword that is likely to hang on banks. There will be time, but for the moment, if everybody was expecting a 10-year great run, there is a small hiccup.
Okay, that is an important update. And Lata, thank you so much for explaining what this could mean for the banking sector in general as well. That's an update. Of course, we'll get into some more news from the RBI. The State Finances report shows that the fiscal health of states has improved from the pandemic-induced deterioration seen in FY21. The gross fiscal deficit is now budgeted to decline from 4.1% of the GDP in FY21 to 3.4% of the total GDP in FY23 as a broad-based economic recovery and high revenue collections provide a cushion to state finances. Slip into a short break now. Up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. We spoke about economies, we spoke about markets. It's time to take a check on the commodity markets as well. Manisha Gupta is joining us as always. Manisha, good morning. What are the commodity market cues today?
Hi, morning, Sonal. Well, the metals for one are trading on a firmer note. The dollar index continues to be on the weaker side. China continues to take steps to boost economy. And then we are dealing with weak inventory, supply disruptions, is the reason that you have seen the copper prices surge by nearly 5% in the Asian markets right now. So with that, we are up by nearly 9% for 2023 till time. Same the case being with other metals too. Aluminum comes next on the list. It's trading at a 7-month high. The global inventories here have declined to the lowest since 2002, and the prices have here also gained up by nearly 9% in 2023. You have the steel prices which have come off slightly, but the iron ore prices on the Dalian exchange are still holding at 14-month highs. So within the metal space, we've seen strong gains continuing. As far as the other commodities are concerned, well, you have the crude oil prices trading steady around $85 a barrel, and gold prices, after hitting 2 days of record highs, today looks like it's getting into consolidation. The international markets also, while they're holding above $1,900 per ounce, but we have come off those 1930 highs as well. So somewhere pivoting around 1910 in the international market.
Okay, so that's the update from the commodity markets, bullish cues at least from the metal space. Thank you so much, Manisha, for bringing us up to speed. But with that, let's move on. Here is some more opinion from Davos. Noted economist Kenneth Rogoff believes that global recession could be borderline or a deeper one depending on the many factors that are playing out in the geopolitical arena. Says China's faltering growth engine may dampen global growth. On India, he adds that it has been one of the most resilient economies. Listen in.
China surprisingly decided COVID zero, maybe we're getting rid of it, and short term that may lead to a boost to global growth. But I think underlying it's still very difficult, still continuing war in Ukraine and Russia, rising global interest rates, or at least high global interest rates because of inflation. I mentioned geopolitics. And I think China, although in the near term it may do well, everybody's been locked up and they want to go spend money. But I think longer term, China has a lot of problems. Well, there's no question that India's been the most resilient major economy and, looks to be doing better than the other big emerging markets. India also, for example, some of its exports are more resilient to supply chains. The tech sector has been very resilient in India. So, by and large, India seems to be resilient. Even if there is a recession, maybe it won't be as dramatic in India.
Okay, all right. That's some of the opinion coming in from Davos. And with that, we've completely run out of time on this edition of Power Breakfast with the news that the SGX Nifty right now is indicating a flattish to a mild green as far as start for our own markets are concerned. Stay tuned. All the market action on Bazaar Morning Call coming up next.